Hi, how are you doing? I'm Quincy Gatsabiwa, and yeah, before I begin on this video, how would you help me out here? Right, you can just go to my Instagram, type this, and just click this button. And that's all you gotta do. Click the damn button. Alright, I do have a lot of educational trading content here, right? A lot of things that could really help you, not possibly help you, things that will really help you. That's what I show, right? So you go do that, follow the damn thing. I have like live breakdowns of the trades that I take and analysis and shit like that. And yeah, man, that's all you gotta do, right? So today we're gonna try to dissect how the Fed rate hikes have been affecting the stocks. Remember, this is a channel that we only focus on stock indices, mainly Nasdaq and S&P 500 and the Dow Jones. Those are the only three stock indices I focus on because they have a direct correlation in some manner, not to the dot, but in some manner, right? So Fed raises rates by another 3/4 of a percentage point. The last time the Fed raises the interest rate was on March 16th. The Fed raised the interest. The Fed raised the interest by a quarter, that is 0.25%. But this time it's 3/4 of a percentage point. This is only to curb inflation, right? So when the Fed raises rates, what basically happens is, for us consumers, for you all consumer, I'm a producer. I like to consider myself as a producer. But yeah, for consumers, what happens to the CPI? The CPI, it kind of goes down a little. CPI stands for Consumer Price Index, so it kind of depreciates a little. And when that happens, is you as an individual, as a consumer in a particular economy that is influenced by US markets, that means that means you're going to lose your buying power, right? So when consumers have no buying power, inflation will go down because not many people will be buying more products, and not many people will be encouraging producers to increase prices, right? It's just basically altering supply and demand, right? So you're just basically altering supply and demand, right? When the demand is low, the prices they kind of go down. I think I tend to mix these things. When supply is high, the prices are low, and when the supply is low, the prices are up. So yeah, you get the point. You lose your buying power as an individual. So right, so the Fed increased the interest rates by 3/4 of a percentage point on September 21st, right? So that was on Wednesday. What day is it? So we're gonna see how that affected everything, right? September 21st, there it is. You see what happened? This candle right here, right? So when the Fed increased the interest rates, we were looking into so basically in the markets, when a high is broken, right, like this, we're anticipating a change of character, right? So by the looks of it, price was looking into changing character, because if you look over here, just this thing only, let me just do this, right? Just here, right here, and also here. Now these things, they're small miniature demand areas, right? This is, we expected price to plummet to mitigate these little order blocks right here, right? Remember, I'm in the 4-hour time frame. I like to do my analysis from the 4-hour time frame because I'm a busy man. I don't look at charts every day, so I swing most of my trades. Right, so we had a little bit of change of character here, right? The change of character meant that now we have changed market sentiment. The market sentiment now had changed. It was starting to go up, but immediately September 21st, right? This was at 2 p.m. New York time, right? Also happened 2 p.m. Fuck, that's EDT. Well, whatever. 2 p.m. Oh, this is New York time. Also happened at 2 p.m. This was released at 2 p.m. And this little spike tip downwards happened at 2 p.m. right? So that's how fundamentals literally correlate with the market, right? So, like, yeah, one might say, oh yeah, Quincy, like, we already had a recession, like, this was totally expected, bro. Like, yeah, it was expected. I was saying we changed character to the upside. Somebody might say it's a liquidity grab, or somebody might say it's a change of character. But liquidity grabs and change of characters, those things, they correlate. I'm not saying that price is going to reach for high prices, because remember, we are still in inflation. So the buying power of consumers just initially, like, this is Nasdaq, right? So many people are not really buying as much Nasdaq stocks yet. So like they're not putting as much value into it. So I bet that really contributes to its sentiment, as in how it's depreciating, right? So yeah, so that happened. So what basically happens here is, since this order block has been broken, the demand zone has been violated. In the coming, well, in a coming time, we're gonna expect price to treat this as a selling pool, right? Now, another reason why this is a very probable selling pool, it's because of this thing right here. We have a very large inefficiency, right? And it wasn't mitigated to the 50%, it was close to 50%, like 48s. It was mitigated to the 48s. But this on its own, because of this imbalance and the breaker candles right here, we are going to anticipate, we are going to assume that this is our sell pool. This area right here is our sell pool. That is what that is what we are anticipating, that this shit right here is our sell pool. Okay, so yeah, so just wait for another video on the next coming days. So basically I'm just gonna wait for this thing to be tested, and then we will see how the market behaves. But here, for here, right, let me just label it as sell pool, selling pool. That's what you expect. Catch you on another day. Have a good day.